We are right back where we were, relatively speaking, when Craig was pointing out this correlation index being extremely oversold, which caused in part this VIX spike of size. We've come right back down into kind of levels we've seen before, both with the correlation index as well as VIX, but dispersion is still way the heck up here. So it's a little bit elevated to say the least. That's the blue line. And it's the CBOE dispersion index. Basically, we're back to July lows in VIX and correlation, but dispersion index has not retreated. It kind of goes in part with that theme that I was talking about in my market thoughts that I wrote last night.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and time frames like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.LaDucTrading.com/club.
All the systemic flows that I highlighted, VIX right back on the ground. Remember, the 1449 is, for me anyway, a key level. It also happens to correspond with a 200-day. So it just happens to correspond, but it's been a key level, kind of like that 1929, 1429. Anyway, these are the VIX index levels that I kind of use as a guardrail. So if we break and get below, obviously the 200-day, but it just happens to be that 1429, then market's going to melt up. If we bounce there, then market will have a little shake and bake. I'm going to go with shake and bake just because options expiration is coming into town. But the irony is that just remember, despite all of these macro moving events that I highlighted in my market thoughts from this Friday, Fed Chair Powell speaks at Jackson Hole. Next week, Nvidia earnings, not to mention PCE. Then we get into non-farm payrolls. We get into early September. We get into CPI and PPI and FOMC. So all this stuff happens in the next 30 days, not to mention this Friday has a double header if you're global oriented, in that August 23rd is also the day the Japan CPI comes out, which could push the BOJ to raise rates again. And right now, remember, they talked it up. The yen spiked higher. As a result, our markets went haywire with the VIX and equities breaking through my support levels. Remember that? Anyway, long story short, they talked that back. But Ueda did not confirm. The parliament is meeting, the Japanese parliament, it's called the Diet. They're meeting also on the 23rd, potentially pressuring the BOJ. We'll see. Remember, this is monetary policy. But right now, it would not be bullish U.S. equities if Japanese parliament pressures BOJ into raising rates again. These are the U.S. 30 days out. These are the major economic macro moving events. This is the Bank of Japan and Parliament event, which again, they'd be foolish to raise rates at this juncture, given what we saw happen to trigger the yen carry trade unwind. But long story short, and as I just showed you with that dispersion index, still very elevated, despite VIX and correlation dropping to earth. Long story short, VIX is supposed to measure 30 days out. VIX is not a zero DTE. This is measuring 30 days of expected volatility in SPY. And it's very strange, don't you think, that none of it is being considered. None of this VIX macro moving event data that we have coming up could possibly upset the apple cart. That also shows in put call ratio that nobody's hedged again. Nope. It is just calls and sold puts and rolling into their sold calls. It's just a very, very bullish mixture. And so obviously I'm curious about this, right? So there's one thing saying, hey, we're going to get up into these gap fills, the trend line tag for Nvidia with an overshoot to 130. All that stuff worked. That's just tactical. But big picture, you can't be complacent about all these risks that are coming up in the next 30 days, not to mention seasonality, which is weak, even though we're going into an election year, which is going to be very highly contested before, during, and after. So you got this situation where VIX is not measuring any problems. It's not worried at all. 14 handle is not worried. So I put all of this here because it feeds into what I wanted to kind of highlight, which is systematic flows. So you got forced selling, which we had into the August 5th low, and it met panic buying. Now, some of this was not forecasted. VIX has never fallen so quickly, not even during COVID, not even, it doesn't matter. It usually on average takes about 18 days for VIX to come back down and retreat. So it took 8. So we went massively actually on August 5th, obviously. Anyway, and you know my BXM indicator has never risen so strongly. This is BXM. And you can see, oh my goodness, massive reflexive bounce. And then the following week, and then obviously Monday. So we're right up into a fib extension level. In the same way that we rolled over, we can pop right back up. But this is just a very chaotic structure that shows we had panic, and then we had panic. So I investigate a little bit more to see, okay, where are these buyers coming from? Retail's not just, oh, great, Nvidia's on sale. No. I got it because we also have the lowest volumes, right? With the lowest volumes of the year, that and Christmas. But the point is, this is very much forced buying is not organic buying. In other words, they're not buying because, ooh, we got great fundamentals or a great macro backdrop, but it's because we have a lot of systematic flows that are clearly in the house. So we talked about CTAs before, and I had listed that in prior weeks before the sell-off 2 weeks ago of size, that they were in the house to sell. Well, GS Goldman estimates that these price insensitive quants, they're called trend traders, deemed trend traders, where we kind of pick a stock we really like or an ETF or a macro trend. Oh no, this is just literally gamma driven. If we're in a positive order, we're in a negative, a down week, up week, flat week, that kind of stuff. So anyway, they bought back 50% of their sold stocks, and they have about 10 billion per day is expected of more buying over the next 2 weeks between CTAs and corporate buybacks. And these are very thin markets. So yesterday was ultra thin. And you know what happened. We had a massive move higher in everything. So case in point, lots and lots of stocks did this from the August low. This was my price target. It was 96, literally gap fill. 97.40 was the prior support that in March that it had to get through and retest. It did. And boom, they had a trend line tag that was coming with 126.88 with an overshot to 129.80, and this is what happened. So once we did stabilize, and these CTAs are, again, a big, powerful force, and we got corporate buybacks, but the point is CTAs have covered and they're buying, and they still have some buying to do, but not as much as this reflexive bounce is basically my point. Next, vol control. Vol control funds, now that vol done its reversion, Nomura estimates that the post VIX crush, this is very important because these are about vol control funds, these funds could buy. This is not like the solid 10 billion per day. This is a could buy up to 192 billion over the next 3 months. So they trigger some of this with this knowledge. It also triggers some funds to front run the move. So this is Nomura, big quant house. This is the quant desk at Goldman. And they're measuring systematic flows. McElligott, he's my favorite quant, of Nomura, estimates that accumulated 5-day rebalancing that just occurred in these leveraged ETFs, right, like the NVDL and all that stuff. They just went through their biggest 1-week buy flow in history with 34 billion. That's not fundamental. That's not macro. That's just like, wow. All right, so they're rebalancing. And in 5 days, they just added 34 billion of liquidity in a very ultra thin market of summer trading. So they did sell, by the way, around 64 billion from mid-July to August 5th and have since bought back a very good chunk. They still have some left. So that's the point. So the point is that they're coming up with a bullish thesis on systematic flows that is still in control of the narrative. Short VIX positioning. I showed you a chart below, massively on one side, and that contributed to the fastest VIX retracement in history. Check out this lovely little, this is the VIX. This short Vega positioning is just massive. Massive. Long story short, we got systematic flows, we got the VIX sellers, and then you've got a dealer environment that shows positive gamma. And this is what I wanted to kind of highlight, that Nomura says dealers are choking on theta, which is kind of cute expression, right? Where the the positive gamma and theta is exploding, that implied volatility in your option. It's making all that money on these long positions. What's going to happen though is 73% of gamma is short dated and expiring Friday. We're talking options expiration on a monthly. That's going to take, believe it or not, dealers back to zero gamma. So next week, after this extravaganza, right? We didn't have any shake and bake so far, case in point with Nvidia. This was the low of the 7th, little bit of digestion here. And literally that week, that entire week was digesting. And then Monday off to the races, Tuesday, gaps. We had just beautiful support above the 55 day and the 21, and it's still holding the 3, which is that yellow. Anyway, it's just getting stronger and stronger and stronger into options expiration. So that's what it means by the dealers are kind of choking on theta. The IV is going way higher. And now we've got options expiration. There should be some distribution. And next week, there should be some distribution. And isn't it kind of cute how it kind of stops at some of these price targets to keep an eye out for? On top of the fact that because it's bringing dealers back to zero on Friday, and you have the Fed chair, Powell speaking, Jackson Hole that morning, and you also have Japan CPI coming out, and potentially the Japanese parliament pushing the Bank of Japan to cut, you do actually have some risk parameters coming in to be aware of for next week. Does that make sense? I hope so. All right, so forced selling met panic buying. We got all of this systematic flow, hope identified. We've got the major macro event triggers coming up for the next 30 days. Long story short, VIX should not stay down there. And we just need one trigger, right? Whether even if it's not Jackson Hole, it could be non-farm payroll, it could be positive print. But the point is, if it's a negative or Nvidia earnings disappoint, we have this propensity now with no hedges in place. Those hedges have been unwound, right? And you can see that very clearly, at least I think, in this. This is massive. So all those hedges were unwound in large part. They're buying calls, they're selling puts, and this is outsized. Wouldn't be surprised if we get some shake and bake, which is basically what I had expected. For a little bit of distribution. It didn't come in. Obviously, end of the week is way too bulled up. But we've got my growth value ratio that's still, and I kind of show that as well. Last Monday morning, I said this is wicked oversold, and it's starting to hook up. It had not crossed yet. You can see the momentum. It stopped going down. Okay, that's cool. It stopped going down. It's starting to hook up. That was very important. And then obviously Monday, Tuesday, Wednesday, Thursday, Friday, today, we've had green on the screen. We've in fact had 8 green daily closes by SPY, which is a nice little track record and hasn't happened since November of 2023 when we had the Fed pause and Yellen Yahtzee and lots of short covering. But here's the thing I want to point out. It hit 2 perfectly. Look at this. Look at this. I took this picture last night when I wrote this up. It hit 2. That was my ratio that I was targeting for this recent bounce. And we hit it. Okay, so now what? We still have systematic flows in the house, options expiration, it gets a little dicier. You know, folks are probably going to take their profits. You can see it today. I don't know if I'm going to call it turnaround Tuesday, but from a 0 DTE standpoint, this, or a weekly option standpoint, this has hit target and it's doubled resistance. Now, do I expect it to go slam right back down? Not without a macro trigger. But do I expect it to slam above it and get rejected this week? Possibly, yes. So right now, this is got to show me that it's going to peter out and roll over before I get bearish on the cues again. I don't have yet a reversal pattern on my growth value rotation, which has been instrumental. Remember, this was literally July 10th and dump. And then I came back from vacation, and whatever that date was last Monday, it's starting to hook up. I wouldn't be surprised if we have a growth rally into 2. We're there. Exactly. So this is where I'm going to be watching to see, okay, we're going to have a little shake and bake now. Now, once we do that, I'm going to be able to see if this rolls over, if this just keeps going higher, we get above 2, that's easy. It's very bullish. In fact, we could have melt up scenario. In the meantime, as I mentioned, VIX is doing nothing 30 days out. It does not have any care in the world. And those VIX sellers are all on one side. And my BXM has never, ever, ever, this I took last week, but the point is that was 1955. And literally yesterday, we went just above it. So this is extremely overbought. So we went from very oversold to very overbought in quick order. So that's where we get some danger into a shake and bake situation. And then you add in there dealer long gamma, and it's been unbelievable past few days. This is worth noting. Again, 73% comes off the board, and that takes us back to zero gamma. Is that going to be positive or negative after that is the question, but we have to get through this week. And then just some other kind of thoughts. This big picture that I had of we'd have a bounce at these key levels, and then we would roll over. I still don't see, besides the fact that we filled my gaps of SPX, almost, I should say, 56.39, almost there. QQQ, 493, almost there. And then, of course, Nvidia, we had intraday 125.52, but I said this trend line will get hit with an overshoot to 129.80. That did take place, but we're still, believe it or not, we still have a gap to fill. Now, this one filled. This one was from Tuesday, 723, and that filled. So we've gotten a few of these gaps out of the way, so to speak, but we still have a big one above 493 and 56.39. We're extended, of course, but those are going to hit. It's not a question of if, it's just when. Hope that kind of gives a little bit. So we had also fear of recession. It's getting, let's get slapped once again. In other words, I have not been worried about recession at all. There's way too much liquidity in the system. Last year, I wrote about consumer spending. It delayed recession. There's no sign of it. We need X, Y, and Z to happen. These are the X, Y, and Z. So I know equities, options, market is not pricing in fear of recession at all. The SOM rule isn't pricing in fear of recession, even though it has triggered. She is out saying, well, maybe this time it doesn't work. The bond market is being blamed, obviously, for just unwinding some of this treasury short, which is distorting fear of recession. But nobody is really pushing on this theme of fear of recession. I'm just going to, in a nutshell, tell you how I measure it. I've been on this, and when it works, it will work. It hasn't gotten there yet, but when the 10-year yield stays below 3.8%, we're going there. When crude oil crashes and stays below 70%, I also think we're going to go there. And when jobless claims get and stay above 267, ditto. So these three things have not triggered. We're getting closer, but they haven't triggered. In the meantime, my biggest tell for why this whole leverage on trade thing is going to take place is still this concentration risk in SPY with MAG 7 and this ridiculously oversold RSP, which even hasn't even made it back to the 2020 highs, is something that will unwind over time. But for right now, we are just having very bullish backdrop with all the reasons that I just explained, hopefully with systematic buyers and retail jumping in and tons and tons of gaps to fill, and it's worked.
Subscribe to LaDucTrading YouTube channel for more live trading room recap videos and other content.